UG Investment Advisors Limited has recently initiated a new position in supermicro computer Inc., NASDAQ SMCI, acquiring 1,000 shares with an estimated value of $1.01 million. This investment represents approximately 0.17% of Supermicro Computer's total shares at the close of the most recent quarter and ranks as the firm's 12th largest holding. Within UG Investment Advisors' broader portfolio, SMCI accounts for roughly 0.2% of assets under management, indicating a measured, targeted exposure consistent with a diversified institutional approach. Supermicro Computer has attracted considerable institutional interest, with approximately 84% of its shares held by institutional investors. This strong institutional ownership underscores confidence in the company's long-term growth potential, particularly its positioning in the AI-driven server and storage markets. Despite this, the stock has faced recent near-term volatility, trading down roughly 2.3% in recent sessions, reflecting investor caution amid broader market fluctuations. Other institutional participants have actively adjusted their exposure to SMCI in recent quarters. Advisors Asset Management Inc. initiated a position during the first quarter, valued at approximately $39,000. Farther Finance Advisors LLC increased its holdings in the second quarter by 12.7%, adding 790 shares to reach a total of 6,994 shares, valued at $343,000. Park Avenue Securities LLC, U.S. Capital Wealth Advisors LLC, and Cigna Investments Inc. New also established new stakes in the second quarter, valued at $310,000, $277,000, and $253,000 respectively. These transactions illustrate sustained institutional interest and selective accumulation in a stock characterized by both upside potential and operational risk. The company's recent financial performance has been notably driven by artificial intelligence-related demand. In fiscal 2025, revenue growth was concentrated in the server and storage segments, reflecting strong adoption of AI servers and rack-scale computing solutions. This growth has underpinned a favorable fiscal 2026 outlook, contingent upon continued execution and effective margin management. Analysts and investors are closely monitoring whether operational performance can maintain alignment with the company's guidance, as any deviation could influence market sentiment. Investor sentiment is currently mixed, shaped by both opportunity and risk. Elevated short interest combined with strong AI demand has created the potential for a rapid technical response should earnings or guidance exceed expectations. Market commentary has highlighted that the stock could experience a short squeeze if positive surprises materialize, amplifying price momentum over a short period. Conversely, near-term risks remain material. Analysts have expressed caution regarding margin compression despite strong demand. Bank of America has maintained an underperform rating, citing the potential for limited near-term profit expansion. Operational bottlenecks, particularly related to shipment delays, have been flagged by research outlets including Seeking Alpha, which emphasizes that revenue recognition may remain lumpy and margins could face continued pressure. High-profile commentary, including public sell recommendations from figures such as Jim Cramer, has contributed to sentiment-driven volatility, reinforcing the importance of monitoring short-term execution. Supermicro Computer is scheduled to release its second quarter fiscal 2026 results on February 3, 2026. This earnings call will serve as a primary catalyst for short-term market activity, as management will provide updated guidance and investors position themselves in anticipation of potential surprises. Currently, analysts maintain a consensus hold rating on the stock with an average price target of $46.19. Of the 18 most active analyst reports, 8 assign buy ratings, 8 hold, and 2 sell. Several recent revisions illustrate nuanced sentiment. Barclays reduced its target from $45 to $43 while maintaining an equal weight rating. Citigroup lowered its target from $48 to $39 with a neutral rating, and Wedbush revised its target from $48 to $42, also neutral. Zacks Research upgraded SMCI from strong sell to hold in early December, and Weiss Ratings reaffirmed a hold C rating at the end of the year. This mixed analytical landscape underscores the balance of opportunity and risk that investors face in the near term. At the close of trading on Friday, SMCI shares were valued at $31.70, within a 52-week range of $25.71 to $66.44. The company's market capitalization stands at $18.92 billion, with a price-to-earnings ratio of 25.36, a PEG ratio of 0.68, and a beta of 1.54. Liquidity and financial stability metrics remain robust, with a current ratio of 5.39, a quick ratio of 2.95, and a debt-to-equity ratio of 0.72. Moving averages show the stock trading near its 50-day moving average of 31.77, while the 200-day moving average remains at 42.53, reflecting the broader volatility experienced over the past year. Supermicro Computer's most recent quarterly results for the period ending November 4th revealed earnings of $0.35 per share, below the consensus estimate of $0.46. Revenue totaled $5.02 billion, down 15.5% year-over-year and below the expected $6.48 billion. Net margin was 3.77%, and return on equity was 12.70%. The company has provided Q2 fiscal 2026 guidance in the range of 0.46 Naira 5 EPS, while analysts project full-year earnings of 1.86 per share. These figures reflect both ongoing operational challenges and the underlying strength in AI-driven segments, highlighting the importance of execution in supporting investor confidence and longer-term valuation. Supermicro Computer, headquartered in San Jose, California, designs, develops, and manufactures high-performance computing infrastructure, including servers, storage systems, and networking solutions for enterprise, cloud, data center, high-performance computing, and edge computing markets. Its product portfolio spans rack-mount and blade servers, storage subsystems, motherboards, chassis, power supplies, and networking components, emphasizing high-density, energy-efficient configurations optimized for GPU acceleration and AI workloads. Leveraging in-house engineering alongside a global manufacturing and distribution network, Supermicro delivers configurable, application-specific systems tailored to client requirements. Overall, Supermicro Computer presents a nuanced profile for investors. Strong AI-related revenue growth and institutional backing support a longer-term positive view, while near-term operational and margin risks create potential volatility. Upcoming earnings on February 3, 2026 will provide critical insight into execution and guidance, shaping investor positioning in the immediate term. Market participants are advised to consider both the upside potential associated with AI demand and the